The Cricket One Day International World Cup kicks off today, and what better than today to understand the economics of the Cricket World Cup 2023, because bear in mind the numbers are absolutely staggering. Guess how much global companies have invested into India for the Cricket World Cup. $3,600 per second of match, and that is an overall investment of $240 million or 2,000 crore rupees. A 10-second ad spot is going for up to 3 lakh rupees, and which is a 40% increase as compared to the last one-day International World Cup in 2019. These are absolutely staggering numbers, and to help understand those numbers better, we have Mr. Lloyd Mathias, angel investor, now joining us live on the broadcast as well. Lloyd, well. You know, I began this whole thing by talking about cricket as an industry, because that's what it is, isn't it? Because, you know, as far as media spends and sponsorship deals go, alone in India, in the investment into cricket alone is around $1.5 billion every year, and that constitutes 85% of all investments across sports in India. Lloyd?
Hey, thanks, Krishnakumar. Thank you for having me on your show, and good to see you too, Kartik. I think clearly cricket is, the national sport. 85% as a number doesn't surprise me at all. And just given that we're going into World Cup season, 48 world-class matches ahead, I think this is only going to peak. Having said which, I think this is as good a time as any, given India's performance in the Asian Games. For the first time, I would say, post-independence in a manner of speaking, other sports are beginning to actually emerge. And while cricket continues to dominate, I think the fact that today we have at least 3 or 4 other sports and sportsmen who are creating waves, I think is a very, very positive sign going ahead. So businesses who find it difficult to get their share of action in cricket, just given the high threshold level costs. To make impact in cricket today, you have to be a really big advertiser.
Fair enough, Lloyd. I should have calibrated my question before I came to you. Fair enough. There is a rise of other sports, definitely. But what I'm surprised over here is we're talking about these big numbers for one-day international cricket. Let's face it, we live in the day and age of T20 cricket, and on the tiresome nature of one-day international cricket. And yet, even for the one-day international format, these are the kind of numbers that India is stacking up. Bear in mind, more importantly, this World Cup is taking place in India. Prime time India timings, 1.5 billion people glued to television for the next month and a half.
Yeah, I think the Cricket World Cup has the kind of the trifecta of 3 great events. One is clearly, a World Cup in India after a long time. The last time it happened in India, we won. That's great. The second point, of course, it's bang in the middle of the festive season. Right, so advertisers and businesses are extremely excited. And third, in a sense, it's the first big global event we're hosting after the trauma of the pandemic. 2021 were relatively write-off years, and sports have slowly begun to kind of emerge. But this is, in that sense, a complete, full-fledged period. And of course, what's more is that India cricket is on the ascent. Today, we are not just a global power in cricket in terms of commerce. We're actually a global power. At this point in time, we lead in all 3 formats of the sport. Having said which, I think if one looks at the 3 big formats of cricket, Test, One Day, and T20, clearly T20 is the money spinner. That's where all the action is. And One Day cricket, ODI, is kind of going through a midlife crisis in a sense. Tests have always been a certain degree of favorite, so there would be some degree of lull. But I think as far as the fact that it's an Indian tournament happening in India, I think it's going to be an exciting 40-odd days ahead.
All right, Lloyd, stay with us. We have another very special guest joining us live on the broadcast. We have Mr. Karan Taurani, Senior Vice President at Elara Capital, also joining us on the broadcast. Karan, great to have you on the show. We're talking about 2,000 crore rupees in the form of money being pumped into the Cricket World Cup that's taking place in India. Staggering numbers, considering the fact that there is so much talk around the tiresome nature of the one-day international format per se. But it comes at a great time. We have a delayed festive season this time. We have Diwali coming in mid-November. October is peak festive season. So great time, and with the way the Indian economy is going, with the kind of slowdown in China and the tensions in Western economies, cricket is really the cherry on top of the cake in India here.
Yes, absolutely. I think, it's the first time that the Cricket World Cup has collided with the festive season. This World Cup is happening only in India for the first time. In the past, we've seen, World Cup tournaments kind of things happening wherein the matches are shared between other Asian nations. Of course, the time zones are very favorable. People will, would want to watch up the matches here. And the fourth thing is that this time around, the World Cup cricket content is available free of cost on Disney Plus platform. So I think this will all lead to a very big, jump in terms of the overall consumption of this content, and that will lead to, in turn, driving better ad revenue for the platforms.
All right, definitely very important one, Lloyd. I want to bring that back to you. Disney Hotstar is set to stream the World Cup free of cost. A big gamble from Walt Disney CEO Bob Iger to get, they've lost 30% of their subscribers in the recent past thanks to losing HBO content. Talk to us about the fact that this time around, online, as far as online streaming is concerned, and bear in mind the eyeballs on online streaming of cricket matches has beaten broadcast TV in a long time ago. Talk to us, how much of an impact do you think that's going to have, and in fact revive interest of people to watch these one-day International World Cup games?
Yeah, I think the hard reality of Indian consumers, Indian market is finally catching up in the context with Disney. But what one's really seen is a lot of the mega tournaments in India have always been streamed free. And clearly Jio Cinema, in a sense, kicked that off with the FIFA World Cup, and then followed it up with the more recent IPL and so on. So I think clearly, but what's emerging right now, therefore, is the fact that online is now suddenly weaning away the core of TV audiences, which were largely, in a sense, very television-led. I think what one saw in the last IPL was that in terms of revenues, online is almost kind of getting there where, shall we say, old television was. So I think this World Cup will possibly see the first time that online revenues might even exceed television revenues. And I think clearly advertising revenues. And I think clearly Disney had no choice but to stream.
But Lloyd, don't you think this was actually the opportunity for Disney to rake in subscription-driven revenue? I mean, we have seen on account of Jio Cinema to begin with, and on account of Netflix, every other OTT platform, we've seen that, Disney Plus has actually been losing money, not just in India, all over the world. And this was a captive, sizable audience of, even if you look at family subscriptions, shared passwords, whatever, you were looking at least 10 million, 20 million subscriptions.
Kartik, they had the biggest subscription base before losing a third of it, and now coming number 3 in the numbers and bleeding in terms of both revenues and subscribers.
Wasn't this the time actually to take in some ad revenue and a lot of subscription revenue as well?
Lloyd, I think the question here is that, do you agree with the gamble? It's clearly a gamble. It's not a given for sure. Yes, you'll get more eyeballs, but do you agree with the gamble or not?
I think media moguls have come to realize the hard way that Indian consumers don't sign up easily for subscriptions. But in any case, the advertising pie is much larger. If you look at the fact, as Karan was saying, that we are bang in the middle of the festival season. Advertisers are dying to get part of the advertising action around the World Cup. I think they really recognize that the money to be made out of advertising on digital, besides television, is a much larger pie. While the gambit could pay off in terms of incremental subscriptions, most subscribers would possibly get off the platform in 45 days or 2 months later. Whereas advertising revenue is far more hard, it's real, and it's something they really seek to capitalize upon.
Okay. Lloyd, I also want to check with you with the kind of news which is coming in. In fact, the Bloomberg report which carried the story which we read in the morning, the kind of advertisers that we're going to see again are going to be the traditional advertisers. We are not likely to see any new age edtech, online gaming
platforms, no betting platforms. You're looking at good old Saudi Aramco, Nissan Motor Company, Hindustan Unilever. In fact, the top spenders, Lloyd, have been Hindustan Unilever, Google Pay.
Google Pay, yeah, absolutely.
Yeah, so, very traditional advertising.
And Coca-Cola. I mean, can't take that away. Coca-Cola being one of the largest advertisers across the World Cup.
Yeah, I think in that sense, it's coming full circle. We clearly saw, at least for the last 3 years, the huge, specifically 2020, 2021, when valuations went crazy and a lot of venture money was going in, $25 billion in 2021. I think the funding winter last year and specifically this year has really impacted. I think more importantly, a lot of early stage companies are beginning to be scrutinized for their profitability, right? So I think those two elements in the room, and therefore a lot of big spends that were pouring in reduced. Obviously, some sectors have got impacted directly, right? So online gaming, has had regulatory issues by and large. So I think in a sense, it's going back to the more traditional, consistent advertisers. And also, like I said, given the fact that this is festive season, where people are out and about shopping, the usual, the apparel, fast-moving consumer goods, I'm not surprised. So I'm saying you're seeing right back. Having said which, recognize that Google Pay and a lot of the digital first companies are still very much in play, right? So I would see a lot of the online players, the Amazons, Flipkarts also being fairly big in the season. But I'm not surprised that the old FMCGs or the old legacy companies are reclaiming, what was earlier their property.
One last question, Lloyd, before I let you go. And, this is something that has always irked me a little bit. How does one calculate ROI on spot spends as high as 3 lakh rupees for every 10 seconds? I mean, you've been, advising and consulting with brands on for so long. Help me understand. I mean, a 10-second spot, 3 lakh rupees, a 30-second ad, 9 lakh rupees. Play 10 times over, you've burned 1 CR, and 10 times is too little in a 50-over match.
In the most cluttered of platforms, like the World Cup, where every brand of every single shape and size and nature wants to make its presence felt.
How do you calculate ROI?
Yeah, so I think brands recognize that an ROI per spot or an ROI per match per se will never make sense. I think what they're betting on is the longevity, the fact that this is a big tournament, the sheer width of the audience you get is immense. This coupled with the fact that we are in a kind of buying season when people are in a positive frame coming 2 years after the pandemic, a cricket World Cup entirely in India. I think all these factors, I think brands are going to look outside just the positive economics of per match returns. The second recognizes that these are legacy advertisers. They do a lot of their homework. Right, so they're not here to get that 35, 40-day uplift in visibility to boost their valuation. They're looking at what investment in the Cricket World Cup is going to do to their brands and to their business for months to come. And I can tell you for a fact that a lot of the FMCGs, they take big bets and then they could have a small silent period, recognizing that a lot of the halo of the World Cup, so to speak, continues for the next few months. So I think by and large, it will be a sensible bet. But yes, of course, the pure economics of per match spend is always going to be very questionable.
Always. Unit economics is going to be problematic when it comes to spending on World Cup ads. Is the word coming from Lloyd Mathias. Lloyd, as always, a pleasure and a joy having you, demystify things for us. Thank you so much for taking time to be with us on this afternoon edition of Business Plus. And with that, we've completely run out of time here on this edition of Business Plus. Thank you so much for watching. Thank you, Kartik, for taking time out to be with us. It's a wrap here from my side. This is Krishnakumar signing off. Keep it with News 9 Live.